Welcome to Stock Guy Analysis. All right, let's get right into it. Today, we're going to look at a whole new way of thinking about the crypto market, one that basically tears up the old rulebook. This comes from analysis by BitMine Chairman Tom Lee, and it suggests the entire game has changed. So let's dive in. Let's just start with a huge question. For years, pretty much everyone has been guided by one single idea about how Bitcoin's price moves. But what if that foundational belief, that one core idea, is now totally wrong? You know the one I'm talking about, right? The Bitcoin 4-year cycle. It's this idea that Bitcoin moves in this predictable, almost clockwork-like pattern. You get a massive boom, then a bust, and the whole thing repeats about every 4 years. And for a long time, it seemed absolutely unbreakable. But today, we're going to poke some serious holes in that theory. We're going to look at why that old playbook might not just be a little outdated, but why it might actually be pointing everyone in the wrong direction in today's market. So, what was supposedly driving this thing? Well, the theories were kind of all over the place. The most famous one, of course, is the Bitcoin having that event where the new supply of coins gets cut in half. Others pointed to things like the money supply, or just big waves of retail speculation. Some people even noticed, weirdly enough, that it lined up with the US presidential cycle, and yeah, even the World Cup. But here's the problem. The market has grown up. The big kids have entered the playground. We're talking about huge institutional investors. And with them in a mix, those old theories just don't fit the data anymore. The timing of the peaks and valleys, it's all out of sync. So, if the old rules are broken, what's actually driving the bus now? Well, this is where it gets really interesting. This brings us to the core idea of this whole new playbook. The new theory is actually pretty simple, but it's also profound. It's that Bitcoin is no longer in its own little crypto bubble. It's graduated. Its price is now marching to the beat of the real-world global economy, specifically industrial activity. Okay, so how do you measure something like that? Well, there's this really clever indicator, the copper-to-gold ratio. Think about it like this. Copper is what you use to build stuff. Factories, houses, electronics, the whole shebang. So when demand for copper is high, the economy is humming. Gold, on the other hand, is just stable. It's the monetary base. So this ratio gives you a super clean signal of economic horsepower. And when you overlay this ratio with Bitcoin's price history, it is absolutely stunning. Just look at this. In 2013, the ratio peaked. So did Bitcoin. 2017, same exact story. 2021, yep, a perfect match. The peaks have lined up with uncanny accuracy. But, and this is the most important part, look at today. That ratio is not even close to peaking. Now, you might be thinking, okay, but that's just one indicator. Fair enough. But check out another key metric, the ISM Manufacturing Index. This is basically a report card for the health of U.S. industry, and it's the same story. 4 out of 4 of Bitcoin's major peaks happened right when the ISM was hitting its high for the cycle. And where are we today? The current reading is 48.7. That's technically in contraction territory. We're not at a peak. We're not even solidly expanding yet. So, the takeaway here is pretty straightforward. If Bitcoin's price is now tied to the industrial cycle, and all the key industrial signals are telling us we are nowhere near a peak, then this model says Bitcoin's bull market isn't over. Not by a long shot. Okay, so that's the big picture view on Bitcoin. Now, let's zoom in on what's happening in the market right now and talk about the number 2 player in the space, Ethereum. If you look at any market sentiment gauge right now, they're all flashing extreme fear. People are nervous. But if you look under the hood at what's actually happening on the Ethereum network, you see a completely different story. The actual usage of the network, it's at an all-time high. People are building on it and using it more than ever. And that has created this huge disconnect. This chart here shows you Ethereum's price relative to Bitcoin's. As you can see, it's trading at a really big discount compared to its 8-year average, and it is way below the high it hit back in 2021. The fundamentals are strong, but the price is lagging behind big time. And just to put this into perspective, to give you an idea of the scale we're talking about, this analysis suggests that if Ethereum were to simply get back to its 2021 peak ratio against Bitcoin, its price could potentially hit $22,000. Now, that's not a prediction, of course, but it just highlights how massive the potential undervaluation might be right now. So, all of this brings us to the future, to the really big, transformative idea that could unlock more value than anything we've seen in finance for a long time. And that idea is tokenization. And look, this isn't just some crypto pipe dream. This is a quote from Larry Fink, the CEO of BlackRock. You know, only the largest asset manager on the entire planet. He and pretty much everyone else on Wall Street sees this as the next great evolution of financial markets. So why is this such a game changer? Well, it's about taking real-world stuff, stocks, bonds, real estate, art, you name it, and turning them into digital tokens on a blockchain. This means you can own tiny fractions of things. Costs get slashed. You can trade 247 from anywhere in the world. And you get way more transparency and liquidity. It's a massive upgrade to the whole system. But tokenization lets you do something even more powerful. This concept called factorizing. It's not just about turning an asset into a token. It's about being able to digitally dissect an asset into its core components and let people invest in those specific pieces. Let's use Tesla to make this really simple. Right now, a share of Tesla stock represents everything. The car business, the solar business, the robot taxi ambition. But with factorizing, you could break that single share down. An investor who is super bullish only on the robot taxi division could buy a token that just represents that future value without any exposure to the car business. It's a level of precision and investing that just doesn't exist today. Okay, so we have covered a ton of ground here, from the potential death of an old cycle to the birth of an entirely new financial system. So let's pull it all together and talk about the key takeaways. Here it is, the new crypto playbook. First, that old 4-year Bitcoin cycle. It's probably broken. You can toss it out. Second, the new driver to watch is the health of the global industrial economy. So watch things like the copper/gold ratio and the ISM index. Third, despite all the fear out there, Ethereum's on-chain activity looks incredibly strong, suggesting it might be deeply undervalued. And finally, the massive wave on the horizon is tokenization, which is poised to completely remake finance and unlock trillions in value. And that leaves us with one last kind of mind-bending question to think about. If any asset on Earth, stocks, bonds, real estate, art, music rights, can be tokenized, broken into pieces, and traded by anyone, anywhere, 247, what does Wall Street even look like in 10 years? That's a fun one to chew on. Thanks for watching. Like and subscribe.